You are listening to chartingwealth.com's comprehensive review and forecast for the week beginning Monday, the 10th of September, 2018. We're a little late putting the show out this Friday afternoon because we just got finished emailing out to all of the new book purchasers their copy of the short chart training that we have done. Again, that offer is still open. Buy the book before the end of the afternoon on Friday, and we will get you your copy also of that special training. It is the book Charting Your Way to Wealth. Regardless, it is a great thing to have because it explains all the stuff that we do here at the channel that we've been doing for years, plus our two main ways of entering into and exiting trades. And thank you for all the wonderful comments from everyone who's purchased it. We're in the 5th printing of the book. Enough said, let's jump into these charts on a Friday. Everything down. How do things look on the S&P 500 as we start getting into the closer to the fall-winter trading zone? What exactly is going on? Well, looks like the market has topped off. Looks like, and again, we're looking originally at the 2-day chart, forgive me. It does look like nonetheless on the weekly that the market has topped off, as I was saying, topped off in the prior week. Of course, it does show itself on the 2-day chart a little bit differently, and we'll get back to that in just a minute. But we have a red spinning top for the week. Price percent oscillator's gone flat, derivative oscillator losing energy. Now onto that 2-day chart, a little premature there. We can see where the market topped off back on Thursday, the 30th of August, and then over the course of this last week, it has started moving down. In fact, over this last 2-day candle ending on Friday, rather precipitously pushing through the 2-day trend line, still above the weekly, but we can see that we have a 2-day weekly vertical crossover that is now in effect. So we will move our trend line, and actually what we will do is we will set up a vertical line to represent the new 2-day trend line actually moving down. Those of you aren't familiar with what we do here with freestockcharts.com and TC2000, it is an amazing piece of software. It is so easy to do all the great things that we do here, and to make it all just that easy. Just put in the new vertical crossover going down on the 2-day chart. Means we don't have an up trade anymore on the S&P 500. Remember, we have to have the weekly and the 2-day moving in the same direction. That's not happening now. Is that movement going to be enough to bring the weekly over? Well, we don't know. We see that we ended the day on the 4-hour chart with actually a green up candle down strong in the morning, a little bit of a pullback on that in the afternoon. Overall for the day on Friday, down 0.19%. Derivative oscillator started losing downward momentum, but that price percent oscillator still heading down strongly. So we'll pay attention and see how the week starts off. But again, we haven't had a weekly vertical crossover for a long time. Maybe the market is topped out and it will start moving down. We shall see. We'll watch for that over the course of the next week on the S&P 500. Now, let's go from the Qs, from the S&P to the Qs, which is the NASDAQ 100 that represents the big tech stocks. What do we have going on there? Well, our Heikin-Ashi candlestick is a red spinning top, means lots of indecision tending down. And you can see derivative oscillator has lost to energy the first time in about 3 weeks. And the price percent oscillator is trying its best to cross over going down. Hasn't done that yet, so we don't have a weekly vertical crossover going down. And we are just continuing to watch. That red spinning top means indecision tending down. What do we see on the 2-day chart? Well, second day and second candle even stronger of strong down movement. Again, hasn't gone through, at least the bottom of the candle hasn't gone through the weekly. The wick has actually pierced it, and we have another confirmed 2-day crossover going down. Now that's happened both with the S&P 500 and now with the NASDAQ 100. And we'll make sure that our arrow reflects that. Those are just, again, little points we can see quite quickly and easily. So 4 days of down movement, the last 2 very strong. What's going on that 4-hour chart? Well, again, after several days of down movement in the afternoon, a little bit of a pullback, but again, no crossover going up or anything. Derivative oscillator lost a little bit of energy. So we'll continue to keep our eye on things and see how all of that shapes up. Back to the weekly chart, and we will go to TLT, which is 20-year bonds. What are they doing? What's 20-year treasuries doing? Well, a strong down week on that weekly chart. In fact, again, trying to cross over going down, hasn't quite done it. Derivative oscillator did flip over into the negative, but not the price percent oscillator. 2-day had gone down, had crossed over going down actually a few days before. We'll get into that in a minute. Pierced, of course, the weekly trend line also. We go to the 2-day, and of course, this is now 4 days of strong down movement, and we had that crossover for the 2-day candle ending back on Wednesday the 5th. So again, strong down currents in bonds. We'll continue to watch those, see what shapes up. Again, we've got a little bit of schizophrenia going on there, a divergence between our weekly and our 2-day, which means we're not trading that. And we see, of course, down movement. And, of course, the strongest chart down for the day on Friday at 0.85% was 20-year bonds, down in the morning, down in the afternoon. However, the price percent oscillator is headed down. Derivative oscillator actually lost a little bit of downward momentum. So we'll continue to just watch and see what we see. No trade there yet. Going to let all these things settle out and let them lead us as to where they go. Now, what's happening with gold? Still sliding sideways. Finished with a down week, actually a red spinning top, closed top, which means indecision tending down. However, the derivative oscillator is losing downward momentum. Price percent oscillator is almost perfectly flat, going down just a little bit. But again, a big sideways slide, third week of that. And we have our weekly still in a confirmed down move. 2-day is in an up move. And we can see that it's lost a little bit of momentum on the derivative oscillator. Price percent oscillator still heading up. That latest 2-day candle is a green spinning top, means indecision tending up. Price movement is above the weekly and below the 2-day. So we'll continue to keep our eye on things. Again, don't have a trade there either because the weekly's down and the 2-day is up. How do we finish the week on that 4-hour chart? Well, didn't have a crossover going up back in the afternoon on Thursday, and then saw things down in the morning and the afternoon on Friday, just 0.27%. So a lot of things trying to shake out. Perhaps the Qs and the S&P will be going down over the next few weeks. We'll just continue to keep an eye on it. When we have, if that is the case and we have an opportunity to get into an inverse trade, we'll sure be practicing those too. I've found that's the easiest way to make money typically when you're shorting the market. At least that's the way it's been for me, and we'll be practicing all those things. God bless, my friends. All the best from the whole team here at Charting Wealth World Headquarters.